Welcome back. Today, we're going to be taking a look at credit scores. My name is Adam Lisowski. Welcome to the 3-Minute Advisor. Let's start the clock. If you're like most Americans, at some point for a major purchase, you're going to have to approach a bank or lender and borrow money. When they decide how much you're able to borrow, and perhaps more importantly, what interest rate they're going to loan that to you, oftentimes credit scores are used to calculate that risk. So therefore, credit scores can actually have a very large impact on your overall financial picture, but a lot of people don't know necessarily how they're calculated. Let's take a look at that today. Since we only have 3 minutes, we're going to be only talking about the most commonly used credit score, which is your FICO score. FICO scores are comprised of 5 different elements. The first is your payment history. Second, the amount owed. Third, the length of your credit history. Fourth, new credit. And fifth is your credit mix. Now, they determine these categories from the 3 major credit reporting bureaus. If you need more information about credit reports, Chad Baxter has a really nice write-up on our website that was recently put up. I'll put a link to that below. As we just saw, 65% of your FICO score is based on 2 major categories, your payment history and your amount owed. Now, according to FICO, payment history is most reflective of whether or not you've been making your payments on time. This is critical to nailing your FICO score. For instance, if you're behind on payments, FICO views it as more important for you to get into a repayment plan with your lender that you can manage, rather than only paying a portion of that payment on a regular basis. The next largest category that we're going to look at is amounts owed. This is how much debt you have outstanding. Now, FICO likes to use the term access to credit utilization, simply meaning you've got access to lots of credit and you can use it when you need to. FICO, in terms of scoring, actually prefers a low credit utilization history as opposed to no credit utilization. For instance, you have high limit credit cards that you use on a regular basis and pay off on time, as opposed to having those high limit cards and not using them at all. The other 3 categories that we listed above that comprise your FICO score, we're not going to have time to go into those on this video. They're a little bit more self-explanatory, I think, but I still will include a link in the description below that you can check out if you have more questions. Despite companies or advertising that might say differently, repairing bad credit is not an easy task and it can take a lot of time. It requires a lot of coordination from several areas of your financial life and implementing good habits that last over a long period of time. If you're struggling with credit debt, or if you have questions about your credit score and working on that score, you can always reach out to us at the email below. Remember, you can do this, and if you can't, reach out, let us know, maybe we can help. Thanks for watching.